Video is the third in a series going through how to process information from a cash receipts journal and a cash payments journal into a ledger account. It is what you need to do for the final part of the 5 credit achievement standard that we are working on at the moment. Alrighty, so in the previous videos we have gone through and put in the balances from the trial balance. We have done the bank account and the GST from both the cash receipts and cash payments journal, and we've processed all of the other entries from the cash receipts journal. Now we're going to have a look at some of the entries in the cash payments journal. So as I suggested in the previous video, you've ripped off that back page, so you've got just the cash payments and cash receipts sitting out there beside you, so you're not constantly flicking pages. Now we have already done the bank. If you have a look here, that's this number here, that's 3,507 that we've taken out of the bank account. We've already done the GST payable, $237, $237 on July 4th, that's done. Okay, now we've got some entries that have already been done from the cash receipts journal, and now we're up to the next line in the cash payments, which is purchases. So if we have a look here, we've got a total payment of $579 on the 4th of July, so for July, writing this really late, so I'm making a few typos, so sorry about that. Alright, and we're going to write cash payments journal, or just cash payments. And because it's from the cash payments, we're going to credit the bank and we debit everything else, so it's not in the bank, which means we're going to be debiting it. So going into your debit column and type in $579. Now we've got a debit balance and we've got a debit entry, so we will add those up together. So on your calculators or in your head, 3,560 plus $579 gives us a total over here of $4,139. Now remember, when you're doing this, line them up nice and neatly on the left hand side, so all the numbers are lined up. Easier to add, easier to read, and it's got a debit balance. We've debited it, we haven't gone through zero, just stays as debit. Alright, that's the purchases side. Drawings. Let's have a look if we can find our drawings account. We've already put in our opening balance. So we've got, over the time, they've got some couple of drawings here that they've taken out, a total of $677. 4th of July, cash payments. Because it's from the cash payments journal, we are going to be debiting it. So we've got, sorry, where are we? Drawings, $295. We'll align that. And then we've got a debit and a debit, so we will be adding those up. So 280 plus 295 gives us $575. Okay, now before I leave you to do the rest of it by yourself, I'm going to have a look at these loan payments. So in the cash payments journal, there's nearly always a lot more things in this sundry column, and so you just have to go through and pick them off. And so first up, we're going to have a look at this tools and equipment, because that's an unusual one. But if you remember from the cash receipts journal, we sold some tools. $87 came in from tools and equipment. And in this one, we've spent some money. So it looks like they've sold a tool and bought a new one. So let's go down and find tools and equipment. And there it is. And we're just going to put that information in there. That was on the 3rd of July. Cash payments. And it's from the cash payments journal, so we're going to debit $382. Line it up. And so we'll be adding that on. So we've got 9,743. 9,743 plus 382. That will give us a new tools and equipment balance of $10,125. And that will be a debit balance as well, because we've just kept adding to the amount of tools that they've got. Tools are an asset. We've given them an account number that starts with a 1, and that's the tools and accounts. Now if we have a look at the other one that I think that could be a little bit tricky, is the loan principal and loan interest. So we're going to have look at those two. Now, it's always run separately because loan principal is reducing a liability and loan interest is an expense. So we've got our loan account up here. We've currently got $2,000 owing on their loan. On the 4th of July, from cash payments, they made a payment of $600. We're putting that in the debit column because it's coming from the cash payments journal. We credit the bank and debit everything else. And we're going to put that in here. We're going to take that $600 off because we've got a debit entry on something with a credit balance. So we've got $2,000 and we are taking away $600, which gives it a balance of $1,400. So in here, 1400, and that is a liability, so it's going to stay with a credit balance. They still owe $1,400. Now the interest, there's nothing there. They must have cleared it at the end of the financial year and not put any new ones in yet. So we're putting in our date, 4th of July. Particulars, we need an opening balance. And at the moment, there's nothing there. It wasn't on the trial balance, so that means it must have a zero balance. If it's got a zero balance, it's not debit or credit, it's just zero. So just leave it as that. Then we're going to go in and do our entry. Also on the 4th of July, we have got from our cash payments, and we're looking at this interest. So that's this here, 100 loan interest. It was paid by direct debit out of our bank account. No GST on interest, so it is $120. That is an expense. The cost of borrowing money is interest. And so we've got some interest here as an expense, and $120 goes into the balance because that's all of the money that's gone into that account so far. And because we've put it in the debit column, that means that it is going to have a debit balance. All right, you're going to have to go through and process some advertising, the wages, the telephone expense. We've already done the tools and equipment. So those are the steps left to go to finish off the information from your cash payments journal. And in the next video, we will do the trial balance.